Holistic. What a wonderful term that is. Now, holistic is a term and an approach that also applies to the world of tax. What? Holistic in the world of tax, I hear you say? Well, in this week's video, I'm going to explain what being holistic is all about, how it applies in the world of tax, and to give you a couple of examples to share with you about why that approach is fundamental. Now, in medicine, holistic is something that looks at the whole person for answers, not just the actual manifestations or the physical symptoms. Now, you may have come across holistic medicine before, where people say you've got to treat mind and body and not just the parts that seem the most obvious to that patient. Well, folks, holistic approach, the all-around encompassing approach, is something that's absolutely vital when we look at tax planning. Now, it's very much overlooked in tax planning, and I've seen too many examples in the past where people come for tax advice from other people and they just get fragmented in isolation. You can't do that. Now, whether you're a business owner, an entrepreneur, somebody who might be managing their own wealth, their own finances, understanding that tax planning isn't just about focusing on an individual tax, misses out the fact that an impact of a transaction can affect so many different taxes that we have. So focusing on how those different taxes can interact can save you money and help you make better decisions. So what do we actually mean by holistic tax planning? And I promise you, no stethoscopes were heard in the making of this video. Now, when we talk about holistic tax planning, we're referring to the practice of looking at the entire tax landscape and not just those individual taxes in isolation. Now, in the UK, like many other nations around the world, our tax system is complex. It's got a range of taxes that applies to individuals and businesses alike. And to give you a flavour, those taxes are, wait for it, income tax, corporation tax, capital gains tax, VAT, national insurance contributions, and there are many more as well. The key to effective and impactful tax planning is to understand how all those different taxes interconnect, interrelate, and how your actions in one area is going to have an impact in a different area. You could almost say it's a microcosm of the butterfly effect. So let's dive into a couple of examples just to illustrate the point that I'm making here. Now, the first example I want us to focus on is a business incorporation and when it comes to remuneration planning. Now, imagine you are a sole trader and you've made that decision. You've reached that point where it's worthwhile for your business to become a limited company. So you're considering incorporating your business into such a structure. Now, on the surface, folks, it might seem quite a straightforward decision. You pay yourself a salary, you take the rest out in dividends. And by the way, folks, that is a okay strategy, but it's limiting. But nevertheless, historically, that is seen as a default tax efficient strategy. Again, there are other things to blend into that mix, but let's just rest with those two options, salary and dividends. Now, if we look at this holistically, there's much more to consider. So, for example, when we balance out corporation tax versus income tax, we might get a different answer, a different conclusion. When we incorporate, i.e. form a company to trade through, our business profits that we generate are now subject to corporation tax rather than income tax, which it would have been if we were a sole trader paying income tax on those profits. Now, currently, corporation tax rates are at the rate of 19 or 25%, and they can look on the surface to be lower than income tax rates. Rub our hands with glee. It could seem beneficial, but you also need to consider taking the money out of that company to recompense yourself for personal usage. Now, if we look at dividends versus salary, dividends are taxed differently from salary income. Dividends may attract a lower rate for basic rate taxpayers, even for high rate taxpayers, but they don't contribute to any national insurance contributions, which will have an impact on your state pension entitlement. Hence the reason we factor then in salaries, because at a certain level, currently £9,100 for the employer, we minimise the employer's national insurance, but we also potentially get that credit for national insurance. Again, this is not a question about the actual numbers, but it's about consideration. We also consider, when it comes to tax extraction, what impact that might have on future borrowings in terms of our own personal tax situation, remember we could combine those two things together. Now, another example of holistic tax planning is when we deal with capital gains tax, which surprisingly enough is a tax on capital, and inheritance tax. Those two will interact. Now imagine the scenario. You own a rental property and you're considering whether you should sell it or not. Now, if you do sell that investment property, you will have capital gains tax to pay on any capital gain. This could be quite substantial, depending on the history of the property, how long you've owned it, how much you spent on that property. A topic for another time, perhaps, but again, you'll be taxed on the gain that you make. Now, if you're looking at yourself and you're planning your estate, you may need to think about inheritance tax. And as a spoiler alert, folks, the earlier you start thinking about inheritance tax, you can minimise, if not mitigate it or eliminate, the inheritance tax that you might be exposed to. Now, you might consider gifting that to your children instead of selling it. You could avoid CGT potentially, but it may trigger an IHT liability if you pass away within 7 years of making that gift. Now, if you hang on to the property and it forms part of your estate when you pass away, your beneficiaries may be the ones footing the IHT bill on its value. Even though there's no CGT at death, so there's something beneficial in terms of passing away, that may not necessarily be a good thing for inheritance tax. The rates are different, the treatment is different, and the right approach really depends on your long-term goals, your health, and your overall financial situation. As with all things, folks, it's really important that you get the right, competent professional advice. Now, these examples, a bare bones example just to illustrate what's going on, will highlight why it's so crucial, so critical to get professional advice when planning your taxes. A competent, qualified tax advisor will help you understand the full picture, ensuring that your decisions in one area don't have unintended consequences in another. That old law of unintended consequences is something we don't want to the detriment when we look at tax planning. Now, tax laws evolve. They change by way of allowances, by rates, things that we can do, things that we can't do. What might be a good strategy today may be less of an impactful one tomorrow. Regular reviews of your tax planning strategy, and I would recommend at least twice a year, or at least once as a bare minimum, is going to be really essential to ensure it remains aligned with your personal goals, your business goals, and the latest legislation. So what can we conclude, folks? Well, to sum up, tax planning in the United Kingdom, as it would be for pretty much most jurisdictions around the world, is a holistic process. It's not just about minimising your tax bill on one front when you consider how all the pieces fit together to create a coherent, effective strategy. Taking a holistic approach, you can avoid those costly mistakes and make the most of the opportunities available to you. And there will be opportunities. If you feel that you'd like us to help you more, then by all means, check out the show notes here, book a slot, or talk to your current advisor to find out how tax planning holistically can be to your benefit. Do also please, folks, check out the show notes here for links to tax calculators we have that can help you guesstimate where you're likely to be on certain taxes. We're here to help you navigate those complexities. If not us who's going to help you, make sure you seek competent, well-qualified advice. Until next time, folks, happy tax planning and be holistic.